moving away from a strong reserve currency to a severely weak inflation plus negative real rates reserve currency. I mean, that gold and Bitcoin are going to fly. All-time highs this year. I think we got to chop around a little bit and, 85 to 90, then back to 85, 93, 87, chop, grind. Once we start closing above 100 and a lot of what I'm saying becomes real, all gas, no brakes. We're catching up to gold. We're going to blast through gold. This bull market has not even started, and we got all confirmation from our financial authorities.
The Federal Reserve has announced that it will halt QT starting April 1st. QT, or quantitative tightening, refers to the Fed reducing its balance sheet, which effectively strengthens the U.S. dollar by removing liquidity from the system. By ending QT, the Fed signals a shift toward easing monetary policy, which means more liquidity, easier access to credit, and a generally more accommodative financial environment. Mallers emphasizes that this move is a game changer. When liquidity conditions loosen, risk assets, stocks, real estate, and especially Bitcoin tend to benefit. While short-term volatility is expected, Mallers sees this as a setup for Bitcoin to thrive, particularly as real interest rates turn negative.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Since I last talked to you guys, the Federal Reserve has come out and said it's ending QT. QT stands for quantitative tightening. Tightening meaning tightening monetary policy, strengthening the dollar. They came out and said, we are putting a stop to QT starting April 1st. That's big deal. That's a sign from the Fed that they are easing monetary policy. Easing meaning they're making it easier to get money, easier to trade, easier to get a loan, easing access to capital. That, of course, is better for the economy. I think in the shorter term, Bitcoin will be volatile and probably to the downside because of some of these macro decisions that folks like the Federal Reserve, the Treasury of the United States of America, the President of the United States of America, because of decisions they've made. And then last week, I said, I think Bitcoin might be bottoming out. I do expect some positive words from the Federal Reserve. And I think the volatility to the downside will likely be ending. And I think Bitcoin might make new highs as soon as April and as late as June. And I think the US, we're going to live through that, weirdly. We're going to live through highly inflationary times where real rates are negative. And Bitcoin should not be treated like Tesla stock. And I think this is the year it uncorrelates. I fundamentally believe that. I think that listen, I don't like speculating on the price because it's not what this show is about, nor do I think I'm going to be right. But I fundamentally believe that we have a much better chance of going to 250,000 than making lower than whatever the local low was, 78. I think Trump is getting what he wants out of the Fed. I think these guys are running out of time, by the way. The debt is too high. The debt is too high. You can't have rates this high when the debt is this high. Bessent's bill is going to be trillions of dollars. The debt is too high. We're trapped. The only way out is through currency debasement. Whose time and energy are you stealing? You're stealing those holding the dollar. How are you going to do that? Inflation and negative real rates. Sure, keep your dollars in a savings account. We'll give you 2% interest and inflate it at 5%. We'll take 3% of the world's time and energy stored in dollars to cover our ass for all the debt we've accrued. Moving away from a strong reserve currency to a severely weak inflation plus negative real rates reserve currency, I mean, that gold and Bitcoin are going to fly. The only reason Bitcoin's not flying and gold is because Bitcoin is bucketed as a risk on asset. I think this is the year that changes. If these guys keep this up, if they keep this up, the Fed ends QT. I literally think Bitcoin is going to decouple from its correlation to the S&P 500, and it's going to go race with gold and outperform it. That's my prediction. I think 250K this year is still very, very much on. Very much on. The price action, we're not going straight to 250. I actually think chop is very healthy. Listen, you don't want to be teleporting to prices. You know, for me personally, I want the market to be sustainable. You know, dropping 30% from a local high and chopping around is great. I don't mind it at all. I expect a slight grind higher to 100. If we start breaking and closing above 100 again, this thing's going to fly. See ya. So I think Q2, we grind higher and potentially make new highs. And Q3, Q4 this year. I mean, one of the things Howard Lutnick literally verbatim said on this podcast is in Q4 of this year, the economy is going to be gangbusters. And it's like, the guy's telling you literally, like, he can't make it any more simple. It's like they're front loading all of the pain now and blaming it on Biden. And they're saying this thing's going to go be gangbusters going into midterms. So like it doesn't get any more legit than the guys running the country telling you on a podcast for free on YouTube. Right? So my predictions remain the same. I think the local bottom is probably in. I think easing monetary policy. Listen, the only uncertainty that the market needs to get figured out is tariffs. We're supposedly going to get clarity on tariffs April 2nd. Nobody has any idea. I mean, based on Trump's Twitter account, it could be this way, that way, left, right, up, down. No one has any idea. As soon as the market gets clarity on that, I think it gets a little bit more stable. I think Bitcoin separates from the S&P 500. I think we're going into a inflation plus negative real rates. I think these guys are committed to re-architecting global relationships. The current fiat currency regime is over. It's ending. It's not sustainable. It's not. It's not. Besant talked all about long end, long end, long end, long end, long end, long end. What's the guy do? He issues at the short end. Listen, sometimes it's this simple. If he could issue at the long end, he would issue at the long end. He talked a big game. When he stepped up to the plate, he issued at the short end. Nobody wants our debt. Nobody's willing to finance this game anymore. This is not World War II anymore. It's over. It's over. Issuing a world reserve currency isn't sustainable. You cannot give the rest of the world a piece of paper you pooped out of your butt in exchange for real stuff like metals, like food, like oil, like gas, like energy. The world is fed up with it. They don't want your stupid, stinky dollars anymore. They don't want your debt. It's over. And we're re-architecting an entire new system. Bitcoin to 100 trillion. That simple. I mean, we've been following this trend for a while. Near-term volatility, we saw Bitcoin dip into the 70s. We're already back to 87. I think we'll chop around, but I think we grind higher from here on out. All-time highs this year. I think we got to chop around a little bit in, 85 to 90, then back to 85, 93, 87, chop, 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 grind, grind, grind. Once we start closing above 100 and a lot of what I'm saying becomes real, all gas, no brakes. We're catching up to gold. We're going to blast through gold. This bull market has not even started. And we got all confirmation from our financial authorities.
Mallers argues that we are witnessing the slow collapse of the fiat currency system. The U.S. government's reliance on debt issuance, combined with a growing reluctance among global entities to buy U.S. bonds, signals a fundamental shift in the financial order. He points out that no country can indefinitely exchange printed money for real assets like oil, metals, and food without consequence. The world is gradually moving away from the U.S. dollar as the dominant reserve currency, and Bitcoin is positioned to fill that void. He even makes a bold prediction. Bitcoin's total market cap could eventually reach $100 trillion. While that may sound extreme, the trajectory of Bitcoin's adoption, combined with the ongoing deterioration of the fiat system, supports this long-term vision.
I don't think these guys have much time. There's just too much debt at the end of the day, right? Like, people love drawing like, oh, but what about in the 1970s? What about the Volcker Fed? Well, it's like, yeah, but they didn't have $36 trillion of debt. So I don't think these guys have that much time. I think they got to start pulling levers. They need liquidity. They need a weaker dollar. They need real rates negative. And so I think we'll get some form of QE immediately. Like classic, like Jerome Powell coming out and saying QE. I don't know if we'll ever get that, or especially not in the near term. But engineered inflation, engineered currency debasement, soon. They don't have time. I mean, the debt to GDP has to come down. I mean, one of the interesting things Besant said on this podcast of his, he said straight up, Elon's got to chill out. Elon's got to slow down. I mean, he didn't, those are my words. What he did say though is, like, in order for me to land this plane safely, our timing has to be right, I think is what he said. But we cannot cut this many jobs without lowering the debt to GDP. He's like, so anyway, I think that there's no time. Gold is priced at $42 an ounce on the government's balance sheet. They could just say, well, gold today is actually $3,000 an ounce, so we're going to update that. It gets updated, boom, there's like $1 trillion new dollars on the balance sheet of the government. So yeah, that's an option. Like, listen, I think that these forms of QE are real, and they're not technical QE. It's not like Jerome Powell's going to come out and say it's QE, but it's QE, right? Effectively QE.
As we move forward, Mallers anticipates Bitcoin will experience some short-term chop, fluctuating in the 85K to 90K's range before making a sustained push past 100K. Once Bitcoin firmly breaks this psychological barrier, he believes there will be no stopping it. The ultimate confirmation of Bitcoin's bullish case will come when financial authorities are forced to inject further liquidity into the system. While the Fed may not explicitly announce a new round of quantitative easing QE, Mallers argues that various forms of engineered currency debasement will serve the same purpose. Whether it's through direct intervention or more subtle policy shifts, the outcome is the same: more liquidity, weaker dollars, and higher Bitcoin prices. Please like and subscribe.